And welcome everyone to another Smart Money Circle episode. I'm Adam Sarhan. With me today is Howard Chan, who's the founder and CEO of Kurv Investment Management, which runs a lot of ETFs. One of the most popular is KQQQ. Howard, thank you so much for taking the time and welcome to the Smart Money Circle.
Thank you, Adam. Glad to be here.
So Howard, I always like to begin. Can you tell us your journey and how you got to where you are today, please?
Yeah, I had a rather unusual and lucky series of accidents, I think. I was trained as an engineer. I studied electrical engineering and computer science, and I was focused on signal processing. At the time, I think there were only really two companies you can work for, and you had to get a doctorate, which is Motorola and Bose. And if I had known that noise canceling earphones will become a really huge thing, I might have kind of stayed with it. But I ultimately, engineering wasn't quite the right fit for me because all of my internships were all in front of a computer, and it lacked a lot of interactions with people, and I wanted to talk to people. So I became a consultant for a little bit, and even there, once you've done, I think people who are consultants can maybe empathize. Once you've done a few of the projects, they all seem pretty similar. So I actually was at a crossroads in terms of what I wanted to do. And when you are at an engineering school, finance was not something you necessarily consider, because I think many people think, well, finance is not that rigorous. How can you predict where prices are? All you know is prices will go up and down. Versus as an engineer, you have to know how many cars that can go across the bridge. What are you designing things for? But I actually think that perspective is not correct. I think the financial markets is so complex that it is very hard to describe, and that's where the fun and the interest comes in. I actually randomly I was living in New York at the time and randomly just send my resume out. I was very lucky. My resume was received at Goldman, and I didn't even really know what Goldman was, to be very honest. And I said something in the interview that probably people shouldn't. I said, I don't know anything about finance. I can do math, I can learn quickly, but you'll have to teach me. It turned out that actually was the type of individual they were looking for, because if they had hired folks from other banks, they would have had to reteach them the way that they do work. And I was also very lucky, and a little bit unusual is that I have never been on the sell side. I went into actually GSAM, which is the asset management side. And I was also very lucky that the group I got into was an asset allocating team. So they managed essentially asset allocation for clients that are about a billion plus, which is generally pension funds. And it was a really great place to look at all sorts of asset classes: equities, fixed income, commodities, hedge fund allocations. And that was great. But when you're at that level, you don't see how security decisions are being made. So I wanted to also, learn more about that. And at the time, I had a focus. I wanted to learn more about global macro, and the two best firms, and probably still is, in global macro is PIMCO or Bridgewater. And it just happened. I felt they were looking for somebody who wanted to manage their global fixed income portfolios, the business. And so I joined there, which again is a sort of a lucky step, because global portfolios at PIMCO is sort of everything in the kitchen sink. So I was able to
Right.
learn all sorts of things in the fixed income world. And because of that, you kind of knew a little bit about everything. They were in the process of setting up an ETF business in the US. And so I worked on some of the US ETFs, and then at some point, they decided that we would like to have the same business in Europe. So I actually moved from Newport Beach, hard to believe, to London. And I was actually in London for almost 6, 7 years building the ETF business there. And then from there, I came back to the US and then, decided to, I was actually moved to San Francisco to try to do a few different things in fintech. And there I met a lot of investors who had, issues with managing their portfolios that were actually, there were many best practices that were available from my time at the previous two large firms. And a certain rule in ETF land changed, the derivatives rule came in. And so, I was asked if I wanted to maybe think about starting an ETF company. I always joke, I've seen this movie before. I'm
Yeah.
not sure. I called up many of the colleagues that I worked with at PIMCO who were no longer there and see if they were interested in joining me on this journey. And they said, yeah, why not? And so we brought the band back together and formed Kurv Investment Management to provide, and our mission is to provide, well-designed, tax-efficient institutional strategies for investors of all sizes.
Love it. That's awesome. That is a great story. So let's talk about Curve. Please tell us what you do, some of the competitive advantages, and why,
Yeah.
what's in it for me type of a thing, why people should be interested.
Yeah, and we, the team obviously have had, a deep bench of expertise from all the places that we work with. So that's definitely one competitive advantage we feel we have. But I think another part is also our interactions with different types of investors. And we noticed that there are many, many institutional strategies that are really great at generating returns, but are extremely tax inefficient. And for many large institutional investors like pension funds or endowments, that's okay because they're non-taxable entities. But as soon as you use those strategies for taxable entities, then there's a little switch that requires that needs to be made in your portfolio. So we're really focused on thinking about tax as part of the strategy. Many people do deal with taxes after they invested through things like tax loss harvesting, but there's all you have to have loss to have, to be able to harvest that tax the tax loss. We want to actually optimize the gains. And so all of our strategies have a few components, which is to think about how can we make it more tax efficient. It's generally options or derivative based because there are certain risk premia in the market that you cannot utilize or harvest, or you can harvest them more directly through derivatives than the traditional asset classes that you have. And lastly, we want to make a strategy that is very easy for advisors and their clients to use in their portfolios.
Got it. I love it. So let's talk about risk. How do you handle risk, and what are some mistakes you see people make with respect to risk management?
Yeah, I think in our world, risk management is what makes great managers versus the, less great managers. I always think about looking at places where there's asymmetric upsides and downsides. And that's actually one of the constructions of our newest ETF, KQQQ. I think there are many places in the market where I think in people's mind, it's sort of a normal distribution where the loss and the gains are symmetric. But I actually think that's not always the case. And even in personal decisions, I can relate that maybe in KQQQ and maybe in a personal a way. Um, in in KQQQ, we try to get exposure to large technology names, but we accept the fact that technology has cycles of exuberance and correction. We just went through one in August. And then the previous one was during COVID, right? Everybody thought we were never, ever going to come out of our homes. So many stay-at-home technology names performed really well. And as soon as COVID subsided, we may be able to see the light of day outside of our homes. There was a correction, right? So instead of predicting when prices will go up and down, we accept that that's the behavior of the sector. So when when the market is going up, we try to weight our names based upon momentum, which is characteristics of technology stocks. And then when the market corrects, we have a mechanism, kind of adaptive cruise control in the portfolio that writes cover calls that generates income and can the downside correction of the sector. So in essence, what we've done is try to look to magnify the upside and then limit the downside to risk manage the portfolio. So that's the asymmetry I'm talking about. But I think personally, from applying just to my own career experience, this move from moving to Newport Beach to work in Europe, right? In my thinking at the time was, I suppose the worst case is if the business didn't work, PIMCO could fire me, I suppose. But the upside was great because it's very rare to be able to start a new business in a large firm. And I wanted to test this entrepreneurial, can I build a business operationally, obviously with branding and financial backing, but operationally a new business by myself and obviously working with teams at PIMCO to make that happen. So to me, the upside was much greater, this very unique opportunity versus the downside, which I suppose I had the confidence that maybe I'll find another job somewhere else, but this asymmetric upside and downside. So that's how I view risk management in both investment and personal life.
I love that, Howard, and echoes what I've learned in my journey. I wrote a book. It was #1 on Amazon. It's called Psychological Analysis. The idea is that fundamental technical analysis is not enough to beat the market. If it was, everybody would own a few islands in the Caribbean. So there's a third school, which is psychological analysis, my contribution to Wall Street. But the point that you're making about risk and asymmetric risk, it's literally defense first. It's part of my investment system. It's make sure when you're wrong, you're wrong small. When you're right big. Like nature, if you look at an apple tree, it has thousands of seeds. Most seeds fail, they don't work, but you lose one seed. And when it hits and when you're right, you get that asymmetric return where you have a new tree and it makes millions of new seeds and then the process repeats itself. So when you're wrong small. When you're right big, and everybody wins. I love that. So how about timeless lessons? What are some timeless lessons you've learned along the way that you'd like to share with the audience?
I think the key for me is to be curious. I know many people maybe say that, but actually the act of doing it is actually, I think if it's not innate, it should be learned. I've done this many times. I in some ways are lucky. The time at Goldman, I could have just kind of stuck in one particular asset class in equities, but it was the idea of like, how do equities work with fixed income and commodities and quantitative strategies in the portfolio, and kind of led me to learn about many different asset classes, which ultimately, at PIMCO also, where I'm not just focused on treasury bonds. How do you think about mortgages in the context of EM bonds versus treasuries? And that led to other things. And maybe I relate something, which is when I was learning computer science, one of actually the intro classes is algorithms, AI algorithms. And at the time, it wasn't actually that useful because the most it could do was actually art. It was a very famous professor. His claim to fame was actually his algorithms automatically optimized airplanes going into terminals, because that was a big issue in the 70s and 80s, because how do you optimize and make sure planes get to the terminal on time and leave on time with the minimal amount of time, time in between, so then it maximizes profitability for airplanes, also for the airport, actually. And then now, obviously, we have this AI boom. So I called a lot of my classmates, like, what's happened? Is there what's the push, right? Like, and these algorithms are all the same: forward propagation, backwards propagation, training these large language models. And the things that changed was compute and data. And so I bring this story because you never know what you learned before when you're curious, can be at some point pop up later in your life that could be applicable. So yeah.
I love that. How about timeless mistakes and what you've seen, what you've done, and or how do you avoid them?
Yeah, I think one thing that I've learned is sometimes it's not what you do, it's what you don't do. Um, we see this even now at Kurv, which is we have some uh, income solutions that generates a yield for people to supplement their income. Uh, there are definitely other products that are in the market that is marketed with a higher yield. And we could also maybe chase that yield. But based upon experience is, we have seen the same story that could lead to adverse investment outcomes. So we don't want to chase the herd in a way. And having conviction of what you don't do sometimes is more important than what you do do.
Yes.
And maybe it takes longer time for that to realize out your thesis. But um, I think if you have patience and you look for the longer horizon, that's generally a better choice.
Love it. And then let's talk about some lessons you've learned being off on your own, the entrepreneurial side of it, from an entrepreneurial standpoint, because that's close to my heart. What would you share there to the audience as far as ways things work, way things don't work, mistakes, or things you would have done differently? Anything along those lines, please.
Yeah, this is definitely a lesson I learned through time, which is the ability to, the analogy I use is to pick a highway quickly,
Yes.
but be willing to change lanes. I think as a leader, you're in the capacity to make decisions. And I think being able to make quick decisions is important. But that's important because once you have decided in a direction, then you can actually start problem solving. I think life is essentially a series of problem solving events. If you've never chosen which highway you go on, then you can't really start addressing which direction you're going in and potential kind of roadblocks. And then once you've picked a highway, then you really want to make sure you get sufficient input from your team, from the clients, from the market, from the environments, and adjust. Because I think my philosophy is as long as I know where to go, I can figure out a path to get there. And so it's very important to be able to be adaptable as you in the direction that you're going.
That is so powerful. I love that. The highway and then pick a lane. That's really switch lanes, but pick a highway. I love that. All right, Howard, last question for you. What is the best piece of advice you'd like to share with the audience or give your 30-year-old self?
Huh. That's there's so many things. I've learned a lot.
I'll take them
It
all.
yeah, I think, the first thing I would say is be patient. I think when I was much younger, and part of actually switching from being an engineer to finance was sort of this, not attention deficit, but, I was working on designing chips that wouldn't make it to the fab for it in 5 years, and you would never see a result really quickly. And so finance, there is a certain gratification where you make a decision, you can immediately see what that result is. But that was a lucky switch. But I think as I've gotten older, I do see things play out a bit. The larger rewards play out over a longer cycle. And then I think corollary to that is, make decisions based upon not what you want to happen, but what you think would happen. I think there's often a mistake of, I would like this outcome to happen, so I make a decision on what that is. But if you consider the motivations of the people around you and the circumstances, most things don't exactly turn out how you think it is. So you need to anticipate what's the deviation from the ideal situation to what actually will happen. This happens also in investments where we often talk about what would the Fed do, what's ideally what the Fed would do, but what they actually would do. There's many sort of forces that prevents you from making the most optimal decisions, and that's important to recognize the difference between the two.
Love it. I absolutely love it. Well, Howard, thank you so much for taking the time. What is the best way for people to get in touch with you or learn more about Curve?
Yeah, you can find everything about Kurv on our website at www.kurvinvest.com, which is KURVINVEST.com. All our funds, and I'm also on there. Less interesting, but all of the information is on that website.
Beautiful. Well, thank you so much. Hopefully, we'll have you on again soon.
Great, thank you.